you are in this for dividends, one of the most important things for you to consider as a dividend investor is that if the stock price would go down at a certain point, I think that's the merit for dividend investing. As long as you get dividends and as long as the dividends that you receive is based on the yield that you actually want to get, I think it shouldn't be a really big concern. What's concerning is if you bought it at a high price and then the dividend yield that you are getting because of that high acquisition cost is something that's not very attractive for you. Let's talk about dividend stocks right now. I made a video about this stock, the Philippine stocks, but I want to put this video for the context of those who are into dividend investing. And at this point also where there's a lot of fear, uncertainty, and doubt, this is one of the best times also to be able to stack, to be able to build a base, and to be able to find dividend stocks that would give you a good return. So please do note this, that the difference in narratives in terms of buying dividend stocks is basically you want to buy them low, because when they're low, it could give you a higher dividend yield. And if you look at the dividend stocks that I've been talking about over the past few months or even the past few years also, a lot of them, they weren't spared. We saw Globe go down, we saw PLDT go down as well. We also saw REIT, MREIT, RCR, C-REIT. We also saw Meralco go down. So what we're seeing also in the Philippine stock market is something that is not isolated to just a few stocks. It's everything. It's majority of the market, especially as interest rates are up. We also saw preferred shares that had lower rates go down also in value, go down in stock price. Now, I want to share this also. Please do note that if you are in this for dividends, one of the most important things for you to consider as a dividend investor is that if the stock price would go down at a certain point, I think that's the merit for dividend investing. As long as you get dividends and as long as the dividends that you receive is based on the yield that you actually want to get, I think it shouldn't be a really big concern. What's concerning is if you bought it at a high price and then the dividend yield that you are getting because of that high acquisition cost is something that's not very attractive for you. You could actually hold because you're being compensated also for time that you're holding, but above and beyond you being compensated for the time that you're holding, all of this also is attributed that you have the ability to be able to get it when it's lower. I think we are in that proposition right now. A lot of the stocks that we have are lower. A lot of the dividend stocks that we have been talking about also have dropped as well. I said this in a lot of videos. One of the things that you could do in terms of what your style should be is that you need to set a yield that you actually want to get. For some it may be 4%, might be 5%, might be 6%, but that is attributed also to the amount of dividends that they're giving out. But above and beyond above the dividends that they're giving out, it also has to be attributed to you buying lower. And now is one of the times that it's actually lower. And the reason why I'm saying this, it's lower, I don't know also how low it could actually go. No one has a crystal ball of how low it will be. But what I do know is, as long as you set a particular target in terms of dividend yields that you want to enter into already, I think it should be okay. So it's what I mentioned earlier, certain dividend stocks that you know also that their revenue could somehow be predictable. For Globe, for PLDT, for Meralco, I think there's a sense of predictability in the returns that they could actually give, primarily because their services are something that's needed, especially for Meralco. So in a world where there's a lot of uncertainty, in a world where there's a lot of fear, in a world where people are scared to actually invest and deploy capital, what's interesting about Meralco and what makes it very predictable is that people will pay their electric bills. And as people will pay their electric bills, you have a sense also that Meralco will have revenue. If it's almost the same as last year, then is there a possibility that they could give also almost the same dividend as last year? The difference though is, if the price is lower, your dividend yield will be higher. If you're a dividend investor, then it's not as scary as compared to people who are in it for growth. It's not as scary for people who are in it to buy low and then to flip it at a higher price, because even if it takes a longer time for the market to recover, but as long as you have the ability to buy it low and then the dividend yield is higher, then I think it should be something that's very attractive for you. It should be something that could give you passive income for a very long period of time. So I had a chance to have dinner with a friend. He asked me this question: what am I doing now for my stocks, especially that rates are higher, the dollar is also high as of this point in time. My answer was very, very simple. I was actually stacking. I was actually aggressive. When it's scary, when it's down, that's one of the best times for you to be able to position. That's one of the best times for you to be able to build a base and actually stack. That's one of the best times for you to be able to continually add to what you have. Now is one of the lower stock price opportunities for you to be able to do that. A lot of people want to come in when everything is nice already. I think what makes REITs interesting is that when they went out and did an IPO, the majority of their projects were locked in for a very, very long time. Majority of their tenants were locked in for a very, very long time. And also they are raising rent, but above and beyond them raising rent also is that they're almost full. Their occupancy rates are better. And comparing it also to condos, there are some people also who have not still recovered from the pandemic. So I think it's still a much better proposition, especially that they are low. Please do remember when REIT was soaring last year, when Globe was soaring last year, the biggest thing that they would think about is, why is it so high? Why is my dividend yield already not as attractive? Now that it's lower, now this is your chance. But it's just scary. But that's where money's made it. People always think that money's made in the bull markets. People always say that money's made when things are going up. In reality, money's made when you position when it's low. Money's made when you buy dividend stocks that could give you higher dividend yields. Imagine if there were crashes and as they started to go down, the dividend yield that you would get would be north of 8%. That would be something that's truly amazing, because you look at some of the stocks that we've looked at, from Globe to PLDT to Meralco, or even some of the REITs, especially for a REIT. If you look at it from a quarter perspective and comparing it from the older releases of dividends that they had, it somehow increased. If you're looking at it 5 or 7 years down in the future, if you buy it low now and they continue to increase their dividends, then it would be better for you, because that means your yield will be much higher than your acquisition for today. And I think that's something that people don't think about so much, because they always think, oh, it's just 5%, it's not really going to be life-changing. But you have to realize that if you reinvest that, or the ones that you initially bought also, the yield of what you initially bought, if the stock price goes higher or the dividend goes higher, that's when it becomes super attractive already for you. Dividend stocks, right now, am I scared? No. Is it a good time to position? I think if it fits the dividend yield that you want, and then it fits the company that you want to position into, then it's okay. Please do remember this also, the fact that they're giving out dividends, then it actually means that they're making money. I think it makes it a lesser scary proposition, because when you're looking at dividend stocks, they're actually making money. They have legit earnings. They have sales. They have net income. They have something that they could distribute back to investors. That's something that's not available to some other stocks that don't have dividends, because probably they're not earning money, or they don't have excess that could be given out. Is it actually a safer bet than some stocks that are growing but their income got hit? Or is it actually better than some stocks that you don't know what the future will be like yet, because there's still a lot of speculation around it? Yeah, dividend stocks are, in my opinion, a good way for you to receive passive revenue over time without doing anything. You have the ability to gain off the upside of the price. You have the ability to gain off the increase of the dividends that they will give out later on. But right now, you're being compensated also because of the dividends that they're giving out. And lastly, because they're very low right now. So if you want to know everything that I'm talking about, what are dividends, what are dividend yields, what are dividend payout ratios, fundamental analysis, I have a book written. It's called Stock Investing Made Easy. I have a book written also. It's called Winning Strategies for Investing. I have a seminar course, links down below, for those who want to learn more about it and want to gain a deeper understanding of what fundamental analysis is and how you can pick and select stocks also that have good dividends. That's it for now. Marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.